Good morning to all traders. I hope you all had a nice weekend, and I want to welcome you for another week. Monday today, it's with Monday bank holiday in Europe, and we are here with our daily market insights video provided to you, of course, by Orbex. President Trump let Mexico go this time and found a weekend compromise, avoiding tariffs set to start this week after a uncertainty of around a week, if I'm not mistaken, and allowing equities continue maybe the upside move. But the problem is that renewed fears of rate cut, and that follows a disappointed NFP last Friday, will likely put more pressure on the dollar. So we've got the equities and the dollar being influenced by two different events, of course. So let's go on the economic calendar to see what we're expecting for the day. Some very good data releases for the pound, with manufacturing production being the highlight. And then, of course, we've got some data from the US, the jobs openings. And before this, not as a major event, ECB's President De Quinto speech and the Canadian housing starts, which this is actually going to be a rather interesting one to watch for the Canadian dollar. So I'm going to go on the charts, and I want to start with the 2 hours index, the dollar index. So I have identified here two running flats, an ABC, and then a connection over here, an ABC. And from here, because we're still looking at a longer impulse wave ending wave 5 over here, truncated, I would say, okay? Now might be time what we start seeing a reversal to the downside. So we've completed three, maybe this is not the completion, maybe actually I'm expecting prices to go a little bit lower to complete a nice fifth wave, because the third wave is a duplication of wave 1, okay? So 1, 2, 3, and then the fifth one should be at least like you know, the first one. So you can expect that to go down a little bit further and then have a correction, and from here start looking for a burst to step in potentially, right? Now down on the 60 minutes, what we can see here, we can see the invalidation points. Okay, so, and I draw that because they are quite important to understand whether the formations that we have in mind are going to complete. So, as I said, identified as a 9, 2, 3, 4, 5, right? The fifth wave, you know, we can never know where it's going to finish, but it is likely that it's going to move a little bit lower. Now, because we crossed last Friday after the NFP, we crossed below this, I would say, middle term ascending diagonal. We crossed outside it, right? Now, we need to check whether this is turned out to be a false break or not, okay? If it turns out to be a false break, prices would most likely remain a little bit longer in here, okay? And the invalidation point to invalidate the downside would be the 97.40. Okay, here we can start looking for sales if, of course, indicators provide any signals. Now, if that didn't happen, prices move back down, okay, we can expect an ABC correction, prices to be retested on this triangle and then move all the way back down. That would be a very good short in the medium to long term, okay? Very good. Now, if we go on the S&P, we talked about S&P last week as well. We are in a zigzag here with an ending triangle. We're expecting this to be an impulse wave, and it was indeed an impulse wave. The truth is that I was expecting this a wave to finish around here, then see a correction. But of course, due to the increasing probabilities of a rate cut now from the US after the NFP, we had another continuation to the upside, where the wave A is most likely going to finish around this price, maybe around 29 or so. Then we're expecting a wave B and then a wave C, and see how that pans out over the medium term. But I wouldn't be surprised if we see price going to 29.41. Invalidation, of course, for this corrective move, because we could expect them prices to move lower for possibly another zigzag, would be the 29.57. In case that breaks, then we're looking prices to move back higher, okay? And quickly down on the 30 minutes chart. As I said, this is an impulse wave, and what it looks like, that is, to me, this is like an ending triangle with a throwback, a spring as called in other terms sometimes, and also another attempt to break higher for a false break. So from here, I'm really interested to see whether prices are going to remain high, because at the end of the day, we should be expecting a correction at some point, right? So although we are in corrective move anyway, an ABC, right, I'm expecting this wave B to start actually forming very soon. And that would be despite the fact that we're expecting the Fed to maybe perhaps cut now. There's more chances at least. So we'll see this in consolidation a bit, and maybe we'll have another false break, and that starts breaking lower. And for lower prices, we're looking at 25.13, or even, of course, below the wave 4 to even 27.70 or so. Invalidation, of course, would be that level. If we crossed below that level, then we're looking at going down for a deeper correction. So I want to thank you for being with us for another day. If you like our video, of course, hit the like button. I would recommend, as always, that you keep an eye on our blog. It's where we cover the latest news, we publish certain ideas, and provide all the necessary tools a trader needs.